Hey there peeps, it's April, it's tax season here in America. If you sold ESPP shares last year, or you work in a company that has ESPP benefits, you're going to want to watch this. I want to share with you what to look out for in your tax return forms to make sure you're not getting double tax on your ESPP discounts, and also what you need to do to make sure that doesn't happen.
This is what it is, okay? Be water, my friend.
Hi there everybody, Kind Juju Base here. I'm a Malaysian who has been living abroad in the States for almost 10 years now. 5 years in college, 5 years in the workforce. There are lessons I learned along the way and I want to share them with you. So if you want to support me and my channel, you can help me out by clicking the like button below, sharing this video with your friends, and subscribe. That way more people can benefit from this content that I'm about to share. So with that out of the way, let's talk about what you click on this video for. ESPP. Okay, before we begin, I must mention that the examples that I'll be talking about later uses tax forms specific to USA. And I want to make a big disclaimer. I'm not a tax expert. I'm just sharing my tax return filing experience. Please consult your CPA for any professional tax advice. Alright, are you ready? Buckle up, because we got a lot to cover. By the end of this video, you should be able to answer 3 things. 1. How you can get double tax on your ESPP discounts. 2. What you need to report in your tax returns to avoid this. And 3. Which form to check to make sure you correctly reported your ESPP discounts in your tax returns. Okay, to start off, before we can understand how this double taxing works, I need to give an overview of how ESPP works. ESPP stands for Employee Stock Purchase Plan. It is a form of benefit where employees get to purchase their company's stock at a discounted price. This is a benefit. Most big companies should have them. Let's walk through an ESPP example. This is you. Your name is Momorin. You work at Skynet. Yes, that's Skynet. And your company has a quarterly ESPP subscription period. We'll look at the first quarter, meaning from month 1, the stock offering date, to month 3, the stock purchase date. And to keep things simple, let's assume you sell your shares on the same day as you purchase them. Assuming you make $6,000 in gross income every month. Uncle Sam will take $1,000 away for taxes. Now your after-tax income is $5,000. Now you contribute $1,000 of your after-tax income into your ESPP basket. So by month 1, you have $1,000 in your ESPP basket. Month 2, same thing happens. Now you have $2,000. Month 3, same thing. And now you have $3,000. Now in month 3, this is when the stock purchase happens. Alright? Your ESPP funds will be used to purchase your company's stock. But here's the thing. What will be the purchase price of the stock though? Assume this is your company's market value over time. In month 1, it was priced at $1,176.47, and in month 3, it is priced at $2,000 per share. Remember, month 1 was the stock offering date, and month 3 is the stock purchase date. Your stock purchase price will be 85% of the lower of the two, aka that's a 15% discount. I've seen some companies do 10, but 10 to 15 is pretty typical. In this example, your stocks will be purchased at 85% of $1,176.47. That means $1,000 per share. That means you're buying your company's stock at a discount. This is your benefit. On month 3, you buy Skynet shares at $1,000 per share, while it is actually valued at $2,000 in the market. In other words, you are getting a $1,000 discount. Let me repeat that. You get a $1,000 discount on your stock. Isn't that amazing? Remember, you had $3,000 in your ESPP basket. That money will be used to buy Skynet stocks at $1,000 per share. That means you get 3 stocks, each worth $2,000, making your total stock value $6,000. To summarize, you now have 3 Skynet stocks worth $6,000 in total, but you only pay $3,000. That means your total discount was $3,000. This is your ESPP discount. Alright? Now how is this $3,000 discount taxed? It is actually recorded in your Form W2, so it is being taxed at the rate of your income bracket. It is considered as income. Now how you can confirm that this number is actually being taken into account in your W2 is to check your W2 breakdown. Usually you should be able to get this information from your company's website But if you're unable to find them online or easily, you should call up your payroll office and they should be able to provide you this number. Now let's say you decided to sell all 3 of your stocks the same day as you purchased them when they were worth $6,000. So now you will have $6,000 in cash instead. When next year comes along, your broker will issue you what's called a Form 1099-B, alright? And its purpose is to report the sales of these ESPP stocks. Let's see how the numbers are actually reported on this form. Your total stock sales will go here to proceeds box. You sold 3 Skynet stocks, so this information will go here. Your purchase cost was $3,000 and will be reported in the cost basis box. Now, what about your discount? How is it accounted for? This is what happens. Take your total proceed and subtract that by the cost basis, and you'll end up with a supposed gain of $3,000. If you don't do anything to this number here, it will be considered as capital gains and will be taxed again. But remember, you already paid taxes on this because it was reported in your W-2. So that means the error comes from this cost basis. So if you only reported this cost basis number provided by your broker, your discount will get taxed as both income tax and capital gains tax, meaning you're getting double taxed. By right, your discount should only be getting taxed as an income tax and not both income tax and capital gains tax. Does that make sense? So this is how you can get double taxed on your ESPP discount. What do you need to do to prevent this? Well, let's check it out. It is pretty common for the cost basis to be reported incorrectly. So what do brokers do? They will also issue you what's called a supplement form to 1099-B. This form will correctly describe your adjusted cost basis. We will see how this number is reported. Here's how the numbers in your form 1099-B will show up in your supplement form. Stocks information will go here. Proceeds will go to proceeds. Cost basis will go to cost basis. The gain-loss amount will go to adjusted amount ordinary income. Okay, now, so how is the adjusted cost basis calculated? Remember these numbers from earlier when we were breaking down your discounts? The total stock market value during the purchase date will be used as the adjusted cost basis. So now your adjusted gain or loss is calculated by taking the total proceeds and subtracting that by the adjusted cost basis. So in this case, the result is 0. You need to report this adjusted cost basis in your tax returns. This way you won't get double taxed on your ESPP discounts. There are many ways to file your tax returns. If you're the DIY type, here are some famous services that you can use: H&R Block, TurboTax, or TAXED. These software should be able to guide you on how to handle the adjusted cost basis correctly. Otherwise, you could also hire a tax consultant. It doesn't matter which way you go about it. Here's what you need to do to make sure that you got it right. This is a Form 8949, which is a tax return form you'll use to report on any sales of stocks. Let's bring in the supplement form from earlier. Here's how the numbers from your supplement form should show up in Form 8949. Stock symbol and quantity goes to column A. Total proceeds goes to column D. Cost basis goes to column E. Okay, now here's where you need to pay attention. The adjustment amount or ordinary income should be reported with a minus sign in front of it in column G, amount of adjustment, and in column F, the letter B should be inserted. You can Google instructions for Form 8949 to find out what B stands for. It's a tax code. Lastly, your adjusted gain should go to column H. Alright, as long as column G and F has these numbers, you have reported your ESPP discounts correctly and you wouldn't get double tax. Whew, okay, we covered a lot of ground and broken down a lot of numbers. I hope you're still with me and things are making sense. So here's a recap. Number 1, how can you get double taxed on your ESPP discounts? If your Form 1099-B reports the discounted purchase price and not the market price of the stocks as your cost basis. Number 2, what information do you need to report in your tax returns to avoid this problem? The adjusted cost basis from your supplement Form 1099-B. And 3, which form to check to make sure you reported your ESPP discounts correctly in your tax return? And that's columns F and G in your Form 8949. They should have the adjusted cost basis. Woo! Hopefully you gained some knowledge from this. And remember, don't get double taxed on your ESPP discounts. Come say hi in the comments. Let me know what you think. If you have any questions, leave your questions down in the comment box. I'll try my best to answer them. Again, I'm not a tax expert, I'm just sharing what I learned. Just wanted to help out. Okay, as usual, if you found this video helpful, and if you haven't already, do help me click the like button, share this video with your friends, and subscribe. Hey, this is Kind Juju Base. Be kind, be conscious, and I'll see you in the next one. Bye! Which form do you check? Which form to check to make sure you correctly report? Which form to check to make sure you correctly... Oh my god!